All right, so today we're going to take a deep dive into something that has the potential to really shake things up.
Yeah.
President Trump's just announced these new tariffs for 2025.
Big news.
Big news.
I know.
And we've been poring over this report that breaks down, what this could mean for the stock
No,
markets,
absolutely.
specifically for us publicly traded companies right here in the US.
Yeah.
So we want to kind of give you the listener like the need to know info, like who are the companies that could actually benefit from this?
Right.
What's the logic behind it? And what are some of the bigger picture, implications of this whole thing?
Yeah. Without getting too, in the weeds.
Exactly.
Yeah.
So maybe to kick things off, you can give us a little bit of a Tariff 101. Like, what is the structure of this thing?
Yeah, for sure. So what's important to know right off the bat is that it's kind of a two-tiered approach.
Okay.
So first off, starting April 5th, pretty much everything being imported is going to have a 10% tariff on it. It's just a baseline.
Yeah.
And then a few days later, starting April 9th, we're going to see these higher, what they're calling reciprocal tariffs.
Okay.
And these are going to be targeted at countries that have a pretty big trade surplus with the U.S.
I see.
So the idea is that, reciprocity means trying to match the tariffs that these other countries
Right.
are already slapping on our American goods.
Gotcha. So like kind of an eye for an eye.
Exactly. Yeah.
Okay.
And according to the announcement, it's roughly half of what they're hitting us with.
Okay. So not exactly like for like, but
Not tit for tat, but definitely a statement.
yeah.
Yeah.
And we're talking like some pretty significant numbers here, right?
Yeah, for sure.
Like for these countries.
Yeah. So we're looking at potentially 34% for China,
Wow.
20% for the EU.
Okay.
Vietnam, a whopping 46%.
Oh, wow.
Japan, 24.
Okay.
South Korea, 25. And even the UK, 10%.
Okay. So like no one's really getting off scot-free here.
Nope. Pretty
Yeah.
much everyone's feeling the heat.
Okay. Now, you did mention that this doesn't cover absolutely everything.
That's right, yeah.
So like what are some of the carve-outs here?
So anything that's already under what are called Section 232 tariffs.
And just as a reminder for our listeners, what are Section 232 tariffs?
So those are tariffs that are imposed based on national security concerns.
Gotcha.
So things like steel, aluminum, and cars, which are already covered by those, they're not going to be hit with these new tariffs.
Okay.
Additionally, things like copper, pharmaceuticals, semiconductors, lumber, bullion, and energy, those are all excluded as well.
Okay. So it sounds like it's a little bit more of a like targeted approach than, maybe what some people were expecting.
I think that's a fair assessment.
Yeah.
Yeah, it seems like they're trying to be a little bit more strategic with this.
Okay. So what is the thinking behind all this? Like what are the goals that they're trying to achieve?
Well, they've laid out a pretty wide range of objectives. Everything from rebuilding the U.S. economy
Correct.
and boosting national security
Mm-hmm.
to tackling the trade deficit, which they actually declared a national emergency,
Right.
which kind of shows you how seriously they're taking it.
Yeah.
They also talk about ensuring fairer trade practices, safeguarding American jobs, incentivizing domestic production,
Okay.
and even potentially things like debt reduction or tax cuts as a result of this.
So kind of like a whole,
The whole laundry list.
yeah, laundry list of potential benefits.
Yeah, and interestingly enough, they're also suggesting that this will actually lead to lower consumer prices,
Okay.
which is something that a lot of economists would probably push back on.
Yeah, I mean, generally speaking, when you think of tariffs, you think of, higher prices.
Exactly. Yeah,
Yeah.
that's typically how it works.
Okay.
Yeah.
So let's get into some specifics here. Like what are some industries that, our listeners might be interested in terms of like who could actually come out ahead in this?
Yeah, absolutely.
So let's start with automotive. We already mentioned that there's like a 25% tariff on most imported cars and parts. Right.
And the goal there seems to be, America first, like let's, build cars here, let's buy cars here.
Exactly. Yeah, bolstering the domestic industry.
Exactly.
And, even though countries like Canada and Mexico, which are part of USMCA, have some exemptions,
Right.
there's still going to be tariffs on content that's not from the US.
Okay.
So,
Right.
generally speaking, the expectation is that we're going to see car prices go up
Okay.
across the board.
Okay. So now in terms of specific companies that our listeners might be following, who are some of the potential winners here?
So, interestingly enough, the report highlights Tesla and Rivian as potential companies that could benefit from this.
Interesting.
And the thinking there is that because of the way their business models are set up, they might be less reliant on imported components,
Okay.
that are immediately subject to these tariffs,
Right.
which could give them a cost advantage over more traditional, gasoline vehicle
Yeah.
manufacturers.
Another area that's interesting is, auto parts. Retailers like AutoZone and O'Reilly,
Mm-hmm.
and used car sellers like CarMax.
Okay.
The thinking there is that if consumers start to, balk at the higher prices of new cars,
Right.
they might be more inclined to hold on to their existing cars longer,
Right.
which could lead to, more business for these companies.
So potentially a little bit of a ripple effect there.
Exactly. Yeah.
Okay. Now, is this like a guaranteed win for all American car makers?
No, not necessarily.
Okay.
For example, we saw Ford's CEO expressing some caution,
Okay.
and GM stock actually dipped after the announcement.
Interesting.
And in fact, Ford's even gone so far as to offer widespread employee pricing,
Okay.
which kind of suggests that they're anticipating, some headwinds in the market.
Right. So they're trying to get ahead of it a little bit.
Exactly.
Okay. So let's shift gears a little bit here and talk about steel. Now, steel already has a 25% global tariff,
That's right. Yeah.
and it's excluded from these new ones. So is the thinking there just kind of like, we're good, we're already protected?
Yeah. Essentially, it's kind of like doubling down on the existing protection.
Okay.
The idea is to really shield U.S. steelmakers, particularly from, competition from places like China.
Okay. So in that case, it sounds like the big winners here are probably going to be like your Nucor, your Cleveland Cliffs.
Exactly. Yeah. So companies like Nucor, Cleveland Cliffs, Steel Dynamics, U.S. Steel,
Right.
all of those major players are likely to continue to benefit from this protection.
And they've generally been supportive of these kinds of measures, right?
Yeah, for the most part, they've been pretty vocal about their support for tariffs.
Okay. Now, are there any potential downsides here? Like, are there any concerns that have been raised?
Well, yeah, one of the things that economists often point out is that, this could lead to higher costs for industries that use steel.
Okay.
So, think about things like the automotive industry we were just talking about.
Right.
Or construction. If the price of steel goes up, it's going to make their products more expensive.
Okay. So there's like a potential ripple effect there as well.
Exactly. Yeah. There are always these knock-on effects that you have to consider.
Gotcha. Okay. So, a very similar story, it sounds like, with aluminum. Existing 25% global tariff excluded from the new measures. Same rationale, right? Protect those domestic producers.
Yeah. Same playbook, different industry.
Okay. And in this case, it sounds like Century Aluminum is kind of the poster child for a company that's, likely to come out ahead.
Yeah, they've been a very strong supporter of these tariffs, so they're definitely seen as a potential winner here.
But even with aluminum, it's not all, sunshine and roses, is it?
No, it's never that simple.
You're right.
Alcoa, for example, has actually warned about potential job losses,
Oh, wow.
despite the tariffs being in place,
Okay.
which kind of highlights how complex these issues can be.
Right. It's not always just like, a straight line from point A to point B.
Yeah, there are always unintended consequences.
Right.
Okay, so before we move on from specific industries, I did want to touch on lumber and pharmaceuticals. Now, both of those were, kind of surprisingly left out of this initial round of tariffs.
Yeah, it was a little bit of a head scratcher.
Yeah, because there were some hints that they might be included.
Right. There were some rumblings.
Right. So where do things stand with them now?
Well, for now, they're kind of in a wait and see mode.
Yeah.
So companies like Weyerhaeuser and Lumber and the big pharmaceutical companies like Eli Lilly Johnson and Johnson Merck Pfizer,
Right.
they're all kind of holding their breath a little bit.
Okay.
But, it's entirely possible that they could be targeted in the future.
Okay.
Potentially under those Section 232 national security provisions that we were talking about earlier.
So they're not out of the woods yet, so to speak.
Yeah, the axe could still fall, so to speak.
Okay. All right. So, stepping back a little bit here, what was the initial reaction from the market when all of this was announced?
So broadly speaking, the market reaction was negative.
We saw futures decline,
Mm-hmm.
the S&P 500, the NASDAQ, the Dow, they all took a hit.
Okay.
And I think this was probably driven by concerns about inflation and potentially slower economic growth.
Right.
And I think this is particularly concerning for tech companies.
Okay.
They
Yeah.
have these really complex global supply chains.
Mhm, right.
Companies like Apple, for example,
Yeah.
they rely on a lot of components from all over the world.
Okay.
So any disruption to those supply chains could really hurt their bottom line.
Okay. So it sounds like it's not just about, the direct impact of the tariffs themselves, but also kind of the ripple effects.
Absolutely.
Yeah.
It's all interconnected.
Okay. Now, you did mention that the market reaction was broadly negative, but were there any bright spots? Were there any companies that, actually saw their stock price go up?
Yeah, absolutely. So as we were discussing earlier, Tesla and Rivian both saw some upward movement.
Okay.
And again, I think that's probably because of this perception that they might be a little bit more insulated from the immediate impacts of these tariffs.
Okay.
We also saw some positive movement for AutoZone and O'Reilly
Right.
and CarMax,
Okay.
which again kind of fits with that narrative of, EVs becoming more attractive and people maybe delaying new car purchases.
Okay.
And then, of course, the steel and aluminum companies also generally saw some positive sentiment
Okay.
because of that, continued protection that they're receiving.
Right. So those industries are kind of full steam ahead.
Yeah, they're feeling pretty good right now.
Okay. And then it sounds like lumber and pharma are kind of just in limbo.
Yeah, they're kind of stuck in purgatory at the moment.
Okay. So, big picture here. What are some of the concerns that experts have raised about, the potential downsides of all of this?
Well, the main worry that you hear from a lot of economists is that these tariffs are going to lead to higher costs
Okay.
for businesses and consumers.
Right.
And this could potentially exacerbate the inflationary pressures that we're already seeing.
Right.
And, they worry that this could slow down overall economic growth.
Okay.
And some are even saying that this could increase the risk of a recession.
Wow.
And, this move could potentially push the average U.S. tariff rate to its highest level in a century.
Really?
Yeah. So it's a pretty significant step.
Okay.
And there are also, specific concerns about things like car prices and drug prices going up,
Okay.
which kind of runs counter to the stated goals of this whole thing.
Yeah. It's kind of ironic in a way.
Yeah, definitely a bit of a disconnect there.
Okay. But, to be fair to the administration and to some of the industries that are, being protected here,
Right.
they do make some valid points, right?
Yeah, absolutely.
Like they talk about leveling the playing field, safeguarding American jobs, shrinking the trade deficit, and encouraging domestic consumption.
Yeah, and they often point to things like, the job gains that we saw in the steel sector
Right.
after similar measures were implemented in the past.
So it's not like these arguments are coming out of nowhere.
They definitely had some data points to back them up.
Okay. So, we've talked about, potential benefits, potential downsides.
Mm-hmm.
But there's one big elephant in the room here, right?
Yeah.
Which is retaliation.
Absolutely.
This isn't happening in a vacuum.
No, not at all.
Like other countries are going to respond to this, right?
Yeah, for sure.
So what are we hearing on that front?
Well, we're already seeing a lot of pushback.
Okay.
The EU, Canada, China, Japan, tons of other countries are actively considering retaliatory measures.
Okay.
And these could target a wide range of U.S. exports.
Okay.
Everything from industrial goods to agriculture to even digital services.
Okay.
And this is a huge concern because, it could potentially negate any benefits that U.S. companies might see
Right.
from reduced import competition.
Right. Because if they're losing business overseas,
Exact.
then it's kind of a wash.
Yeah, it could all just even out in the end.
Right. And, the worst case scenario here is like a full-blown global trade war.
Exactly. Yeah, that's the big fear.
Which would be bad for everyone.
Yeah, nobody wins in that situation.
So, I think it's pretty clear that this is a very complex situation.
Very multifaceted, yeah.
Lots of moving parts. We've talked about some potential winners, some potential losers, but, ultimately, what do you think are some of the key takeaways here for our listeners?
Well, I think the main thing is to understand that this is not a simple black and white issue.
Right.
There are potential benefits for some domestic industries, but there are also some very real risks and downsides.
Absolutely.
And, the international response is going to be a huge factor in all of this.
Right.
So, for the listener, pay attention to the wider economic ramifications.
Yeah.
Don't just focus on the individual companies that might benefit in the short term.
Right, because ultimately this is going to affect all of us, right?
Exactly. Yeah, it's going to have an impact on the entire economy.
Okay. So, before we wrap things up, I always like to leave our listeners with a little something to think about.
A little food for thought.
Exactly. So, given everything we've discussed today, the potential benefits for some companies, the potential downsides for others, the very real threat of retaliation.
Right.
What's the big question that you think our listeners should be asking themselves?
Well, I think the big question is, what are the true long-term costs and benefits of this kind of protectionist trade policy?
Okay.
And I think it's important to think about this not just from the perspective of specific companies,
Right.
but also from the perspective of the average American consumer.
Right, because ultimately we're the ones who are going to be, paying the prices at the store.
Exactly. Yeah, and
Hmm.
feeling the effects of any economic slowdown.
So a lot to think about.
A lot to unpack, yeah.
All right, well, thank you so much for joining us today for this deep dive.
My pleasure. Thanks for having me.
And to all of our listeners out there, thanks for tuning in. We'll see you next time.
See you later.